Hello guys, welcome back to my channel. Good afternoon, good morning, wherever you're watching this video from. I'm excited to bring you this video. Seriously, I wouldn't lie to you. This is one of the amazing video. This is one of the best video I've done so far in this channel. Now I want to take my time and explain how to get into a trade that you really don't have to place trades and be scared. You can see the market is just dipping down, right? It's going to dip down for a long time, right? And my take profit is open, like the take profit is open, so depending on how the market reacts, that is when I'm going to close the trade, right? So now I want to teach you how to place trade on synthetic indices. Now you all know for the longest that I trade currency pair, I trade stocks, I trade cryptocurrency, I trade synthetic indices, I trade anything tradable, right? Now, the reason is that the strategy I use is not peculiar to particular pair or particular kind of market. It's just generalizing in the whole market, because one thing you want to understand is that the market tend to do the same thing in all chart market. As long as it's in a chart market, chart movement, it tends to do same thing. You can see the market is just dipping down. You can just see it before you. It's a live trade. Is a live trade. If you check my previous video, the one I did on that's a new broker that just came out and a new synthetic that just came out, and I bump into it and the strategy still works, right? So but I'm just gonna pick one or two things and tell you and teach you how to place trade, that you place trade with peace of mind. You are just calm, right? You are just calm. Even though the trade don't go your way, you are still calm, right? That's the importance of trading. Because look, if you're always checking your phone to check if you're in profit or in loss, they'll trust me that you have made a wrong decision. Now either you took a bad trade, or your step loss is too high, that is, you're over leveraging. But if you place a trade that is reasonable, you are going to have peace, because even though that trade don't go your way, you still have a lot more to try again, right? Because every single trade you place is either you win or you lose. Now I don't take it lose, it's either I win or I learn, right? Why the trade don't go my way. So now you can say I place this trade. This is 1 hour time frame. Now this, if you go to my Instagram handle, I always post, you see this arrow, I've just screenshotted my chart. The this is my, when I screenshotted it was my before, and maybe in few days now it will be my after, or in few hours it will be my after, and I'll post it. What I will show is just the same time frame, but this is just like 20% of the whole movement that just happened. It's just 20%. The real work is in the higher time frame. You have to settle down and break down the chart. You have to dissect the chart. Now I want you to pick your pen, pick your paper. Let's dive straight into the video. Now if you are just watching this channel, if you are new to this channel, my name is Miracle Anayo and I am a forex trader. I'm a cybersecurity student, and I do a lot of things, right? So if you are interested in forex trading, just sit back and watch. If you like my style of trading, then you can feel free to message me, because I always drop my number in the description box, not on the comment section, please. So you can do it to message me, and the price has returned back to $30, right? It's now $30 back to $30. So you can do it to message me. I'll teach you how I trade, what I look out for. It's very simple. So you then go out there and trade whatever you like, right? You can trade the stock market, Nasdaq, currency pair, whatever it is, and you have your peace, right? So let's dive straight into this video. Now number one thing I always look out for is what I have different stuffs I look out for, right? So the number one thing from all of them is what we call psychological level. Psychological level is what you are seeing there, where you see the 5,500. That's the psychological level, right? You have them, all the random number can have a low battery. Yeah, so psychological level is what you look out for, like where you have the 5,500, those random numbers that you can think of. Now I'm going to explain in a simple term what psychological level is. Psychological level is those numbers, right? For instance, you go to the market to buy a good, a particular goods, let's say a phone for instance, and the seller told you, look, I'm going to sell this phone to you at a price of let's say 100,000 naira, right? 100,000 naira. Now, as a Nigerian or any world body, as long as you're a human being, the next price that could come your mind from 100,000 naira could be, depending on your budget, but at least you are going to say something like, let's say 60,000, let's say 80,000, 85,000, 90,000. You guys start bargaining right now. You notice that there is no way on earth you are going to say 64,367 naira so kobo, or let's say 67,000, all those imbalanced numbers, right? You are going to give it to a random number. So that's those random numbers is what we call psychological level. Now you want to ask me, okay, so how is this now important in the financial market? This is important because these are numbers that the hedge banks pay attention to. These are numbers that whatever trading hedge that controls the financial market pay attention to, because they want to place their trade as a random number, place it at 5,500, that buy order, their sell order. So because your money don't really move the market, you want to follow the winners. You have only two competitors in the market. You have the bull and the bear. You want to follow who is winning, right? And just make money and get out from the market. This is how it works. Now you want to know that, okay, financial, since the synthetic don't really have these hedge banks depositing their money, moving it. Synthetic indices is just like mimicking. If you go online and search what is synthetic indices, of course this is what you're going to see. They mimic the currency pairs. Now you want to say, okay, so why is this psychological level still in importance in all financial markets, in all chart market? Now since the synthetic indices is trying to mimic the currency pair, of course it's going to mimic everything. And even though it doesn't mimic everything, there is a inbuilt support and resistance that has been built in the synthetic indices to help regulate the market, move in accordance with the financial market. If not, the synthetic will just move in a straight line, or in either bearish or bullish. So they want to mimic everything, making the higher highs and the higher lows, lower lows and lower highs. So they built a inbuilt number. So even the derivative or whatever broker it is that owns it, we want to also use a random number. Don't want to stress yourself and making 3624.66, 3824.66 and all of that. Don't want to make it a random number, right? Now, so those random numbers is what you also have to pay attention to. But now here is the problem, right? If you are trading, each pair, whether synthetic indices and all of that, have different psychological level that they pay attention to. Now you can see crash 300 right here, pay attention to 5,500. Now if I should go to jump, you will notice that jump doesn't pay. Okay, now let me show you something really quick. Once I go to my 4-hour time frame, okay, let's go to daily time frame. Right now you can see you have the first psychological at 5,500. The next one is 4,500, a difference of 100 pips, right? A difference of 100 pips. Now if I should go to jump, you will notice that that's jump 25. The psychological level is not the difference of 100 pips. The difference of psychological level in jump 25 is difference of 200 pips. Now in jump 10 could be 70 pips. In volatility whatever can be 30 pips. You understand? So now where the issue is how to identify the right psychological level, right? So which I won't be disclosing here. It's just what I have noticed so far in the market and how to discover the psychological level. But if you can find your way through and finding the right psychological level, then that's the key. You just totally kill the market about 70%, because the market moves from one psychological level to the other psychological level to the other psychological level. But now another issue about psychological level, because alone can't make you a profitable trader, because you will notice most times the market will break above the psychological level but trade the other way around all totally. I'll show you a typical example right here. Okay, you can see it's a difference of 500 pips. Sorry to say, there's a psychological level right here. That's supposed to be here, right, at 5,000, somewhere around. Okay, somewhere around here, exactly around here. This is where it's supposed to be, right? A psychological level have to be. If you check back, you see a reaction around there, right? So it's different of 500 pips now. So that's just it. So if you can find a way in how to calculate the psychological level in different, some will be in weekly time frame, some will be in daily time frame, some will be even 4-hour time frame. But if you can find a way through, then you've killed it in 50%, right? 70%. Now you notice the market moved from psychological level to the other psychological level. You check from here, you move from this psychological level, break all the way through to this one, break all the way through to this one. Now you notice the market break above here. So this is where it gets tricky. Once it breaks above, you might be triggered by FOMO, fear of missing out, and start buying. It's buying. But notice the market rally all the way down here. So you have to really know how to apply the psychological level the right way, so you will not be get caught in this kind of trap, right? So that is it about psychological level. If you can maneuver your way through all this, then you are actually good. Now the second thing I look out for is market structure. I look out for market structure a lot, right? Because it tends to now make you understand how to read psychological level well, and know when the psychological level act as a support or a resistance, right? So not all psychological level are acting as a support. Some of them you are going to know that the market is just going to blow through that psychological level. It's not as if it doesn't exist. So that's the key about market structure. And yeah, so now how do I notice this market structure? Now there are different ways in how I predict the market structure, right? There are different ways in how I predict the market structure. One is that the market structure moves in pattern. It moves in a particular projection. Now for this particular one, it moves in canceling to it moves in 2 to 3 movement. I'm going to explain that. 2 to 3 movement. Now what do I mean by 2 to 3 movement? From here, cancel 3, cancel 2, that's 1 2, get to the third one, comes back to the last one, it moves, then cancel the next 2, 1 2 to the third one, comes back to the last one. Now you notice now what's supposed to happen is for it to cancel 1 2, go to the third one, come back to here. But why did I choose to sell here? Is a particular pattern I saw here that made me to start selling. Now this stock profit is open, my stop loss is all above here, is open. I may see there's a pattern I'm going to see that will make me to know that this market is not ready to go to the downside. That will make me to close the positions, right? But right now I have to trade this market from here all the way to this place, right, to the next psychological level. That's where my take profit is supposed to be. So but depending on how the market react and make me to place the trade. So that is it. Now the next thing I want to tell you about is what trend line. Now trend line, supply and demand, these are key levels, because you have to look for different, this is a game of probability. So you have to be sure that look, this market is you just have no option to go to the upside, right? That's a high probability trade. Now that seems like a 80 to 20, 80% to that favorite position direction, and 20% to the other side, right? So that's all about how I plot this level. Like psychological level, the market, I only place trade. Now I want you to understand, I only place trade as psychological. I only take psychological level trades. I don't place trade in between, except I have a trade running from psychological level. Then if I see a change of market structure, like a continuation of structure, I keep adding position. But I place trade only psychological level. Like this trade I placed here is going to run as long as the market is obedient. It's going to run. I'll just keep adding position till it gets to 5,000, right? So let's go back and let me show you why and how I place this trade. My data is kind of fluctuating right here, so that is why you haven't noticed any movement. So yeah, so now what did I see? I noticed on the 4 hour, I think that was 4 hour time frame, you can see the market got, this is a kind of invert head and shoulder, like an invert head and shoulder. I can notice a consolidation, but before this consolidation, I told you at the 4 hour daily time frame that this market is going to reverse, right? So coming down, I have to see more confluences apart from the higher time frame psychological level, right? Now I want you to understand this in this pattern. Now it's just like you holding a long chain. You know, when you hold a long chain and you're moving your hand fast to the left, like left right in to and fro like that, you notice that only the ones like the few meters up from your hand will move in accordance with your hand. The rest will go opposite direction, right? You're going to the left, the tail will be going to the right, but it's going to come in accordance to where you're going where you're going to, right? Now that is how the market works. From the higher time frame is swinging it to the upside, but in the lower time frame it's going to go to the opposite direction before it align to the higher time frame. So what you want to do is to get that maximum trough, that maximum opposite direction before it starts to align to the higher time frame. That's how we trade, right? The higher time frame has told us the market is going to sell, but going to the lower time frame is still going in the opposite direction. Now getting to that peak is where the psychological, that is, we use the psychological level, supply and demand, and all these key stuffs you've been hearing to predict the maximum opposite direction the market is going to go to, right? So this is how we trade it. So now I got to that place and I got to the 1 hour time frame and I figure out this, right? Going to the 30-minute time frame. Sorry, let's go to the 30 minutes and let me show you something real quick. Now you notice that my take profit is all above the 5,500. So anything that will make this market goes above this place, then I am wrong in this trade, right? So you can see the invert head and shoulder right here, the head and shoulder pattern. You can see the left shoulder, the head. Now this is where the right shoulder. Now I want you to give you a little secret about head and shoulder. And head and shoulder, on invert head and shoulder, is only valuable when the other leg tends to break this place. Like you can see the break, right? You can see the break. It tends to break it. Then once it breaks this level, right, it shows you more potential, more strength. You can say, I love this momentum. It breaks this the structure, the change of market structure with high momentum. It shows that there is high probability that this market is going to go to, it's going to drop, like it's going to drop massively. Then what do? I then plot all my levels. These are all my levels where I'll be adding more positions, right? These are all my levels where I'll be adding position. When it gets to this place, breaks, retest, I'll be adding position, breaks, retest, adding position. So these are my levels where plotted. I don't want to make this video quite long. I have other trades, jump and I think that's jump 25 and I think that's crash 500 also at buy limit and sell limit, right? I have low battery right here, so because of my battery I'm going to be stopping the video right now. But if you are interested and you like the way I trade, because I just have the piece, just place the trade. I can choose now to break even on my trade, bringing my stop loss somewhere above here, somewhere here, and just let the trade run risk free, right? So my battery is just running down right now. So because of my battery, I have intention to share a lot in this video. Because of my battery percent, I'm going to be stopping here. And also, yeah, just going to be stopping here. And if you're interested and you like the way I trade, to use this particular strategy to trade whatever I want, if you like trading BTC, ETH, whatever it is, feel free to DM me. It's now $30, like $30, right? $30. Now that's it. It's not just, I'm not just going to take you on a live trade to show you how I trade, and that's just it. I have videos, right? Recorded videos where you can go and watch. I have students that are also doing well with those videos where you can watch on Telegram group. You can go and rewatch over and over again. And when new concept is brought out, I'm still going to do a video back and post it in that video. You can always go back to it. You have a lifetime access to the group, right? To the video. And also one-on-one section is to groom you, right? To groom you on how to get started on forex trading. And yeah, that's it. And I also have signal group in case you really don't want to trade, you just want to pick signals, then that's cool about it. You can DM me. I have particular for currency pairs and synthetic indices, and I have long term for stocks, just trading stocks. You can hold it for a month, which is actually cool, instead of buying Apple phone, which is not bad. You can buy their stocks and hold it for a long time. You can buy BTC and hold it for a long time, sell BTC, hold it for a long time. Like the way BTC, I sent a signal. If you check my Instagram handle, I'm going to drop my handle in description box. I sent a signal to buy BTC at a very low range. I think that was about 23k, right? About 23k. Was it 20? No, it was about 20k. Yeah, 20k. I told to buy BTC, and you know what BTC is right now. So imagine buying this BTC when I said you should buy. There's another big impulse coming up in BTC right now, but it's not yet time, right? So just buying and holding for a long time is actually cool. If you're interested in that, you can reach me out on my Instagram handle or my YouTube channel or my WhatsApp group. First of all, you can go to my Instagram handle and check my post. You can check the post and see if this is what you really want to do. Within there, you're going to see the BTC trade where I call for BTC, my before and after the trade, like in a long term. So you can choose to, you can see, check out for yourself. If you are interested, then you can go ahead. If you are not, that's actually perfectly fine, right? So That's it about this video. Seriously, it's my intention. You can see market is retracing back, but still it's going to go down. Depending on how the market reacts, it's fine. And if I should lose this particular money, it's actually fine, right? So this is what happened. Most of us now will place a trade here and carry our stop loss and put here. We'll put our stop loss here or put it somewhere here, which will make you always keep checking. I hope this market have not stopped me out. But there's room, enough room to the upside. You can see the enough room for the market to do its thing. It can come back, just tap into this place a little, and before rallying down and all of that, right? I can choose to even bring my stop loss all the way. God, my battery is so low. I can choose to bring my stop loss all the way above here, right? Once I bring it above here, I will minimize my lot size to accommodate what I'm willing to risk. Give the trade enough room to go to once it goes to the other side and stop me out, then you know that definitely there's no reason for the market to now start coming back down, which is more painful. There's nothing as painful as the market stops you out and go your direct direction. You start calculating how I wish, which is not rich in your trading career. So that is it about this video. If you find this video anywhere help you, do where to like, subscribe, comment below, and you can see the market are deep down again. The market are deep down again. So that is it about this video. Thank you for watching, and see you in my next video. Don't forget my number is in the description box, and whatever you need is in the description box. And peace.